there are a lot of other industries and devices that consume a lot more energy than Bitcoin.
Anyone who is fully vaccinated can participate in indoor and outdoor activities without wearing a mask or physical distancing.
We are anxious about it. It has been spreading.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the Early Edition on this Friday, the 14th of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Singapore moves in lockdown as virus cases rise on the island nation, putting its highly anticipated travel bubble in Hong Kong in doubt. Crypto cacophony. Bitcoin is down 13% over the 3 days after Elon Musk reiterates his problem with the virtual currency's carbon footprint. And Colonial Pipeline hands $5 million to hackers in order to restart operations. What will that precedent mean for future cyber attacks? So we have quite a lot going on, and it's been a very busy week. We try and be on top of all the stories that matter to the markets. Now, Singapore is returning to near lockdown mode for 1 month. The authorities there are concerned by an increasing number of unlinked COVID cases. Untraced infections have more than doubled, 15 in the past week from 7 the week before. While these numbers are far smaller than any of those in Europe or the US, a city-state was one of the handful of so-called COVID havens that had nearly eliminated the virus domestically. Well, joining us now from Singapore is our senior editor, Derek Wellbank. Derek, first of all, what exactly are these new restrictions?
Well, Francine, the new restrictions that Singapore will have starting on Sunday include limiting groups down to maximum of 2. It was 8, then it was 5. It's going to be 2. All indoor dining is going to be banned across the city-state. And Singapore had been moving towards a return to office. That's now fully reversed. Work from home is the default option going forward. This all kind of for at least a month as Singapore's trying to clamp down on a rise in COVID cases, particularly with this Indian variant that we've been talking about. You did mention, though, that you're talking about on numbers that are far, far lower per capita than it would be elsewhere. I'll give you a statistic. Singapore yesterday had somewhere in the neighborhood of 4.2 per million cases. New York City has about 95 per million new cases a day. And America just said masks off outside, and Singapore is saying, well, we got to get this under control right now. The divergence between East and West could not be bigger here.
Derek, the other thing is how many people are actually vaccinated in Singapore? So they don't know. Is there critical mass vaccination that puts the vaccines in question, or did Singapore just go about it a different way?
Well, so Singapore's doing pretty well for Asia. It's actually one of the best in Asia, where a little more than 20% of the population, around about 20% of the population is fully vaccinated at this point. And the drugs that Singapore are using is Pfizer and Moderna. So you're talking about two of the best in the game. It's just sort of going along, slowly but surely. Right now, if you are 45 and over, you can get vaccinated. It hasn't opened up for those below. That's supposed to start opening up later this month. So as I say, it's okay for Asia. It's doing pretty well for Asia. But really the key indicator here is these what I call COVID zero countries. You think about Singapore, you think about Australia, New Zealand, you think about places like Hong Kong. The risk appetite there is so much lower than it is in the U.S., in the UK and elsewhere. And so when you've been so successful at keeping COVID down for so long, and Singapore has been one of the best places to ride out this pandemic anywhere in the world, it's really hard to open up because you have to have a risk tolerance there. And Singapore's trying to find that balance and hasn't been able to find it so far.
Derek, in the U.S., the CDC has lifted mask guidance for fully vaccinated people. Even President Joe Biden has taken his biggest step yet towards declaring a victory over the pandemic.
The Center for Disease Control and Prevention and the CDC announced that they are no longer recommending that fully vaccinated people need wear masks. This recommendation holds true whether you are inside or outside. I think it's a great milestone, a great day. It's been made possible by the extraordinary success we've had in vaccinating so many Americans so quickly.
So, Derek, President Biden, they're talking about the vaccination program. How does Singapore compare? I mean, we were talking a little bit about, of course, how they compare, but is there anything that we can learn from what's going on in other parts of the world and bring back to Singapore?
Well, I think, as I say, that when you're talking about part of the country has been vaccinated but not all, it makes reopening very, very difficult. The ministers who talked today and announcing this were basically saying that a full vaccination program is completely essential, and we're not there yet. Singapore is on track to vaccinate about 75% of the population, maybe around September or so, but it had been charting this path toward reopening that includes holding the Shangri-La Dialogue next month. It includes holding the World Economic Forum later this year and these travel bubbles, including with Hong Kong. Well, the travel bubble with Hong Kong is now in serious jeopardy. Shangri-La is still going forward. They're still saying they're going in person. World Economic Forum, haven't heard anything different there. But you start sitting there as you're trying to get forward, and you're like, oh, one step forward, two steps back. It really is difficult to get out there. And I think one of the key things to note, I think, for everyone watching worldwide, is this isn't coming at the same speed. Right? If the U.S. is opening and that's fine, that's the American risk tolerance, right? We all know how different the American risk tolerance is through this entire pandemic, for better and for worse. That's not going to be the case everywhere, and especially these countries that haven't gotten full vaccination yet. Right. It's going to be a while. So strap in, because this is going to go on for a long, long while, and maybe longer than people think.
Derek, thanks so much. Bloomberg's senior editor there, Derek Wellbank, joining us from Singapore. Meanwhile, in the UK, concern over the new COVID variant originating in India may force the country into accelerating its vaccine program. This amid plans next week to reopen indoor hospitality. Now, the Prime Minister said all plans were on the table.
And we are anxious about it. It has been spreading. We want to make sure that we take all the prudential or the cautious steps now that we could take. So there are meetings going on today to consider exactly what we need to do. There's a range of things that we could do. We're ruling nothing out.
Well, joining us to discuss all of this is our Danny Berger. Danny, Boris Johnson there, of course, setting the groundwork for potentially introducing more restrictions. What would that mean for business and economy?
Well, certainly any sort of uncertainty is very difficult for businesses. That's what we've seen in the past, because, of course, there's a cost associated with reopening. Now, to be clear, Boris Johnson did also say that there was no evidence to suggest we couldn't go ahead with the reopening of indoor hospitality on Monday. So that seems to be going ahead as planned. But, of course, there's questions. What does this mean for the vaccination rollout program? Is that going to change in any respect? What happens to the June 21st deadlines of easing some of these social distancing restrictions, and what about international travel? So obviously this throws a lot of uncertainty into the equation. Not only does that hurt, but just consumer hesitancy, concerns about the virus, maybe not going indoors to dine or really, spend and go to shops because people are concerned. That can also hit the economy too, Francine.
Yep, they certainly can. Danny, thanks so much. Our Danny Berger there with the very latest on some of the things that we're seeing with COVID. In the meantime, Amazon creating 10,000 new permanent jobs across the UK. This, of course, folds into the bigger number that we heard yesterday from Amazon. So they are recruiting. Does that lead to more inflation, or is it deflationary because costs are down compared to traditional high street? Something that we'll, of course, try and keep an eye on. Now, coming up, the crypto market has had a roller coaster week. Elon Musk, once again, the main man in the front seat. Up next, we talk Bitcoin and its alternatives with Rabobank's Jane Foley. This is Bloomberg.
The major Wall Street firms have now allowed their clients to buy Bitcoin. Big corporations, many of whom are not called Tesla Motors or Elon Musk, are buying Bitcoin. So those trends are just starting, and this is a multi-decade disruption. I think we have a long way to go here.
I think there's something like 75% plus of miners are actually using renewable energy right now to mine. There are a lot of other industries and devices that consume a lot more energy than Bitcoin.
When we see pullbacks in prices like this, whether there are market dynamics, news, or even someone like Elon Musk tweeting about Bitcoin, we see investors using this as an opportunity to average down on their investments.
Some of our guests are on Bloomberg TV reacting to Elon Musk's latest criticism of Bitcoin. Now, the Tesla chief executive tweeted, "I strongly believe in crypto, but it cannot drive a massive increase in fossil fuel use." Musk's tweets, as well as his appearance on last week's Saturday Night Live, have created wild swings in the market for digital currencies, sinking Bitcoin from a record high and propelling Dogecoin from meme obscurity to real crypto contender. Well, joining us now is Jane Foley, Rabobank Head of FX Strategy. Jane, I'm going to ask you about crypto. Where does it go from here?
Well, I think the news from Musk is a little bit of a setback. I mean, certainly if we go back to the first quarter of this year, this whole idea that corporate acceptability was rising in terms of crypto was really boosted by Elon Musk. So the fact that he will not now accept payment for a car in terms of Bitcoin is a bit of a setback. But I think it's just that. It is a setback. I don't think that this is going to be any more than that. There is still a lot of reasons why people are investing in various types of cryptos, and of course the market continues to develop with other coins coming on. In fact, Musk is saying that he is still, very much in tune with the development of another crypto coin. But I think, for many economists, that the argument still swings back in terms of central banks. What are they doing? What are they going to do about this? And certainly we know that various different central banks are investigating the use of cryptos, their own cryptos, and I think ultimately this is where it's going to be. Central banks ultimately want control of the money supply. And whilst cryptos developed after the financial crisis because people, wanted to avoid banks and wanted to avoid that monetary system, I don't think central banks are really going to like that because of inflationary pressures. They want to keep control. But this is a very early debate, I still think, and I think we've got many years to run before, we really get any degree of sophistication with respect to crypto.
Yeah, and there's, of course, the investigation to Binance and things like that. But Jane, overall, if you just also look, because of these tweets, if you look at the performance of Bitcoin and other cryptocurrencies, they're also just not a very good hedge at the moment against inflation.
No, they're not. I mean, I would definitely just still put them very much into the speculator element. And I would say the reason why so many people are involved is purely because they've seen the past rises, being so significant for currencies like Bitcoin. So people just want to get into that. So every time we do see more information about crypto, or we see retail investors, many types of speculative investors getting involved. But I don't think that they are deliberately, or many of them are deliberately getting in there because they see it as a hedge against inflation at this point in time.
Jane, thank you so much. Jane Foley there of Rabobank stays with us, and we'll talk a little bit more about inflation. Of course, we'll get on to dollar dynamics. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The situation between Israel and Hamas has escalated overnight. Israeli ground forces are shelling Gaza amid more rockets from the region. The nation is also calling up reserve troops. More than 100 Palestinians and 7 Israelis have been killed. Hundreds of buildings across Gaza are damaged or now in ruins. Former UK Prime Minister David Cameron is defending his intensive lobbying for the now-collapsed Greensill capital. During nearly 4 hours of interrogation by 2 parliamentary committees, Cameron denied he was motivated by a big Greensill paycheck. Investigations are underway over if senior members of the government did the former Prime Minister any special favours. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, the word of the week, inflation, if not the word of 2021 and possibly 2020. Markets pull back from the worst-case scenario expectations, but is there still money to be made in the FX world? Of course, there always is if you know where to put it right. So one person that does, Jane Foley. She stays with us next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, inflation fears seem to be cooling this morning, even after the shock of the U.S. consumer price report. Now, market gauges of inflation expectations have pulled back from initial spikes following the data, which showed the biggest monthly increase in core CPI for almost 40 years. But there is still opportunity in the FX world. Well, Bloomberg Intelligence's Audrey Child-Freeman writes this morning that even if inflation is transitory, there's room for fresh upside in volatility markets. Well, Jane Foley of Rabobank is still with us. So, Jane, given some of your inflation forecasts or expectations, or certainly the debate that the markets are having, how do you play it in the FX space?
Well, I would certainly say that the debate, the very fact that the debate exists, means that there's likely to be volatility. And as we saw after the release of the CPI earlier on in this week in the US, we saw this pocket of dollar strength as the market concerns about inflation again rose. And I think this is going to be something that we're going to see again and again over the next few months. We're probably not yet at peak inflation levels in terms of the CPI, the PPI indices. Market concerns will be there. And even though the Fed continues to soothe these fears with the word transitory, I think that the fact that the debate exists means that there will be volatility, and this is really interesting. And we're seeing right now arguments, really, I think, both sides of the coin, whether or not it's transitory or not.
So where are you expecting dollar, euro dollar, but what's the best pairing for dollar right now?
Well, euro dollar, I think, gets an awful lot of attention. And I think we are going to see some volatility, choppy around current levels. But I think choppy is really the word. It wouldn't surprise me if we saw a breakdown again below that 120 level, if we get another surge of inflation fears. And I think that will come. Even whether or not you believe it or not, I think it's difficult to dismiss the fact that the debate will persist, and the debate will go on, and the debate will create some volatility. And, one thing that does worry me, even though it's very easy to argue that second-hand car prices, that will be transient. Of course it will be. We can see hotel prices surging. Yeah, that's likely to be transitory, true. But what about the energy transition? What about the fact that we're moving to different energy sources? What about the fact that we've got global warming? Those sorts of facts. What about in the US? People's reluctance to go back to work, perhaps because they can't get the childcare, perhaps because for the time being they've got enhanced benefits, but perhaps because they're also worried about face-to-face contact, given that the pandemic continues. What about the fact that we still have, rising issues about the pandemic in various countries in Asia as we speak? So all of these concerns suggest to me that there may be a little bit more permanence in some of the inflation than perhaps the Fed is letting us on. But we've also got to remember that the Fed wants inflation to be above 2%, probably just above 2%, because it would like to be able to raise interest rates to really restore its arsenal in terms of policy tools. So, they are going to be deliberately behind the curve here.
Jane, is it possible that actually China would start some kind of huge infrastructure project? I don't know whether it's to counter the U.S., but, if they do, could we also be importing significant inflation from China?
Well, that's interesting. If we look at China now, we know that they produce half the world's steel. We know that they absorb, because of that, about 55% of seaborne iron ore. But look what's happened to iron ore today. Iron ore prices are well off their highs. They've really slumped. And that's because China is taking action to try and stop the increase in iron ore, because they don't want to see these additional costs either. So China is actually taking some action to try and calm some of these price rises. Now, that's interesting because it comes back to inflation expectations, which is really crucial. Because if people believe, or companies believe, that inflation is going to carry on rising, well, they tend to bring forward purchases, or they may even start to hoard. And there may be some companies hoarding some of the supplies of raw materials, frightened that these commodity prices will continue to go higher. Now, of course, if hoarding happens, or people bring forward purchases, well, it increases the demand and increases the amount of price increases that you get. So it makes the whole backdrop with respect to inflation worse. So China is trying to take some control over iron ore prices because we have seen PPI inflation, rising in China too.
Jane, thanks so much. Jane Foley there, Rabobank Head of FX Strategy. Now, we'll be speaking with the Cleveland Fed President, Loretta Mester, a little bit later today. Don't miss that interview. It's going to be a good one. It's all about inflation and, of course, Treasuries. That interview, 1:30 p.m. London time. Now, coming up, Bitcoin is on a wild ride as Elon Musk continues his attack on the virtual currency. We'll take a look at what it means for the Doge father and the fact that he's gone sour, actually, on Bitcoin. Then we also look at commodities. There's quite a lot going on. Again, it has been a pretty big week for news overall, but also for some of markets. The concerns about inflation now appearing to regain some of their equilibrium at the end of the biggest retreat in 11 weeks. Of course, the focus is on this economic rebound, overriding worry about the negative side effects of inflation. That's at least for now. More on all of this next. This is Bloomberg. Singapore moves back towards lockdown as virus cases rise in the island nation. In the U.S., the CDC lifts mask restrictions for fully vaccinated people. Crypto cacophony, while Bitcoin is down 13% over the 3 days after Elon Musk reiterates his problems with the virtual currency's carbon footprint. And Colonial Pipeline hands $5 million to hackers in order to restart operations. Toshiba and the Irish Health Service also report ransomware attacks. What will that precedent mean for future cyber attacks? Well, good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance, the early edition on Friday. Happy Friday, the 14th of May. Now let's get straight to our top market stories with our Danny Berger. Danny, commodities really under quite a lot of pressure today.
Yeah, and it's really fascinating. I think that the commodity space has really been, one of the most eye-catching ones of the past week, maybe even the past month. But notable this week for the sudden about-face in terms of sentiment. It started really with that inflation data last week, so we had this general risk-off that hit commodities, but now we have China trying to step in, control this surge in prices. So I have up here, I have steel that's taken a big hit, down 4%, iron ore, copper as well, not down as much as the others, but still down. And I want to stick with iron ore here. Mark Cudmore pointed this out as really the commodity that exemplifies this sudden turn in sentiment. So on Wednesday, we had this peak price in iron ore. And since then, since that price right there, the intraday high, we've had an almost 20% tumble. So it really is remarkable to see something going from these extreme highs to a sudden downward sell-off. It's almost behaving like the cryptocurrency market. And just while I'm on that point, I want to give us a quick look at what Bitcoin has done for the week. It's up slightly higher this morning, but for the entirety of the week, falling more than 10%. Francine, I think this just sort of exemplifies the dangers when you have one man who can act as a catalyst for the crypto market, that, of course, being Elon Musk.
I mean, definitely, I don't know if it's a godfather of, but something to do with father of crypto at the moment. Danny, thank you so much. Our Danny Berger there with the very latest on the markets. Now, let's stick on the crypto discussion. With us now is Tracy Alloway, Bloomberg executive editor and host of the Odd Lots podcast. Also, actually, with newsletter coming out soon, which I'm quite excited about. Tracy, thank you so much for joining us. I know you're, the crypto queen. You understand this better than anyone. You've been covering it for a very long time. Do we have any cryptocurrencies that are more green that will, become the forefront of, for example, what Elon Musk wants to invest in?
Yeah, I was just listening to your conversation there, thinking that Elon Musk must be the central banker of Bitcoin, right? If you think about someone who's able to move the price in either direction with a single statement, the analogy closest to that has to be a central banker. Again, kind of ironic for a cryptocurrency that's supposed to be decentralized and immune from governments and central banks, of course. But to get to your question, there are alternative cryptocurrencies out there. The big problem with Bitcoin is this proof of work idea. This is the computation that consumes a lot of computing energy, and miners who do this typically have a competitive advantage by sourcing the lowest electricity cost that they could find, which means that sometimes they use things like coal power, anything that's cheap. Now, Bitcoin could move to a different thing called a proof of stake concept, but it's going to be pretty difficult for it to do so because it is decentralized and because it doesn't have strong leadership. There are currencies out there who already operate on a proof of stake. The biggest one is probably Ethereum. And in fact, a lot of people out there are getting very excited about Ethereum based off of Elon Musk's comments, even though he didn't actually specifically say anything about Ether.
But so, Tracy, where does this go from here? So, you know, there are a lot of course, analysis saying, well, this wasn't an effective anything against inflation, given the week we've had on the markets. At the same time, it's being adopted more widely. So where do some of these cryptos go from here? There's also the investigation on Binance.
Well, I think the big change in the crypto space over the past year or so has just been this tension between Bitcoin maximalists who believe that Bitcoin is the one and the only cryptocurrency, the one that has the most promise and the most technological use, versus everyone out there who's experimenting with new and perhaps more innovative things. And, you know, that said, there are people now who are saying, well, this is just evidence that Bitcoin is going to end up as the sort of AOL of the initial cryptocurrency era. And eventually we're going to get something that's more efficient, more interesting, and more useful, something more along the lines of Google. And so now what we're seeing is this intense battle taking place to see which coin that could be. Elon Musk, maybe he's going to lead the charge, although it's a little bit weird that, very weird that he's doing that with Dogecoin, which again is a proof of work type cryptocurrency, but it does have certain parameters that make it more energy friendly than Bitcoin. But, you know, the battle is on. Everyone's looking to see, well, if we all care about energy in the crypto space now, we all care about efficiency and what can actually be done with the blockchain, the underlying blockchain and the currency, well, then we should be trying to identify the best possible coin for all of us and really migrating towards it. So it's going to be interesting to watch the battle play out and the cryptocurrency community kind of continue to eat itself.
So, Tracy, if it's not, I like the way you said that, actually, because it does feel like that exactly happens sometimes. Tracy, if it's not Elon Musk, I mean, Elon Musk, you know, in some of his tweets, it just looks like he's having a bit of fun, you know, with Doge. So is there someone else that you'd be looking at to give us an indication of actually what the Google and the crypto world is, as you so rightly put it?
Well, there are plenty of people who are out there looking at this space, and we at Bloomberg have written about the tension between what Elon Musk is saying about Bitcoin. He's saying that it's not very clean for the world, and what others like Cathie Wood over at ARK have been saying about it. She thinks it's going to incentivize a green revolution because people will need electricity to mine, and so costs will eventually come down, that sort of thing. So people are looking at it, but the problem with collectively electing Elon Musk as your sort of spokesperson for the crypto space is that he can be unpredictable, and we saw that on his Saturday Night Live appearance. He basically came out and said, what, you thought I was going to be a normal guy? Well, the Bitcoin maximalists are discovering this week that Elon Musk is, in fact, not quite a normal guy, and he is unpredictable when it comes to his tweets. And, you know, the entire crypto space is kind of suffering and confused because of it.
Tracy, thank you so much. We'll continue, of course, speaking to Tracy, getting her insights and thoughts, and also following those tweets by Elon Musk. Tracy Alloway, Bloomberg executive editor in Hong Kong, joining us this morning. Now, setting a precedent while Colonial Pipeline pays almost $5 million to hackers after a ransomware attack. Toshiba and the Irish Health Service also report hacks this morning, so we discuss that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, a Bloomberg scoop, Colonial Pipeline paid nearly $5 million to hackers within hours of a cyber attack that brought the flow of fuel in the U.S.'s largest pipeline to a halt. Colonial has begun to restart operations, but gas shortages across the East Coast continue. We're joined by Bloomberg's Jamie Terabay, who's been covering the story from the very beginning for us. Jamie, thank you for joining us again. So ransoms are discouraged. So what kind of precedent does this set for other companies that are hacked in this way?
Thanks for having me, Francine. Unfortunately, this is not the first time, and it's definitely not going to be the last time where you see a cyber attack on this scale take place. You know, if anything, it should be a warning to companies that they really need to take all kinds of preventative measures to really keep close the data that matters to them. sometimes when it comes to an attack like this, the calculation a company makes really comes down to just a couple of variables. And the most important of them is whether the company has backups of the data that's been hijacked. And what we see here, and what the most interesting thing about all of this, to me especially, is that this happened on Friday, the same day that Colonial found out about the attack and they shut everything down, is the same time they paid the ransom. And that tells you how urgent a matter it is for them, for their customers, and the sort of the critical nature of their role in the economy and in the industry. So if you don't take something from this and decide that you really need to scrutinize your cybersecurity practices and make sure that a hacker group cannot steal your data, lock it up, and demand money for it, then you know, I'm not sure how much more significant a signal you can get after this.
Jamie, what can we make of the amount of money that was actually paid?
You know, it was, for a lot of people, it seems like a significant amount. Obviously not that much in terms of Colonial. And it has to be said that this is a drop in the bucket when it comes to how much money ransomware victims have paid. You know, just over the last year, the year of COVID, the year of working from home, and all kinds of security compromises in people's networks, at least one report prepared by the Institute for Security and Technology said that ransomware victims paid $350 million in 2020, a 311 increase over the year before. You know, this is not something that's going away, and it is a very good business model for hackers. So it's the cost of doing business, and whether you choose to pay in terms of cybersecurity for your company or you choose to pay hackers afterwards, this is a business decision at the end of the day.
Thank you so much, Jamie Terabay there, of course, our cybersecurity expert on everything that's happened with the Colonial pipeline. Now, JP Morgan is the biggest funder of fossil fuel companies globally. Now it's pledging to cut carbon emissions for its lending portfolios, including oil and gas. Last year, the bank agreed to align its financing activities with the Paris Climate Agreement. And banks have been issuing climate-related announcements in recent weeks after the White House called for businesses to do more to curb pollution. Well, joining us now is Marisa Buchanan, JP Morgan Global Head of Sustainability. Thank you so much for joining us, Marisa. When you look at some of your pledges that were pretty well received that you announced yesterday, does this come from pressure from outside? Is it regulators? Is it shareholders? Is it politicians?
Good morning. Thanks for the opportunity to be here. So we announced yesterday new Paris-aligned financing targets for 3 key industry sectors: oil and gas, electric power, and automotive manufacturing. And we're doing this because it's the right thing to do. But there's also business opportunity in the transition to a low-carbon future. So we've been, very aggressive over the past few years in increasing our sustainability efforts and commitments, working with our clients to do this work, and really supporting them on the transition to a low-carbon future, which we know is really essential.
Marisa, is this in any way an admission from you, but also other banks, that actually lending to fossil fuel companies in the past was the wrong thing to do?
So fossil fuels, historically have really powered our global energy economy. They provide everything from, the electricity that we use to power our homes, get to work, run our factories and industrial facilities. So, it's really been the backbone of our energy economy. And, this has really fueled global economic growth and development around the world for so many billions of people. But we know that, the use of fossil fuels has also created real environmental challenges, especially climate change. And so the opportunity that we have is to really work with a whole range of companies across the, traditional energy ecosystem to support them to invest in new technologies, new solutions. This is one of the key reasons why we announced a few weeks ago a target to facilitate and finance $2.5 trillion to support our clients and their efforts to transition. And it's really about bringing capital to the table and, in my view, addressing climate change in a way that ultimately is really good for business and promotes economic growth and opportunity.
Marisa, are there any companies that you've already turned away for funding because of their emissions?
So, we work really proactively with our clients. We are a client and customer-centric organization. So always our first objective is to, proactively work with our clients. This is one of the key reasons why we've established 2 new industry teams. One is a Center for Carbon Transition, which is working across our corporate and investment bank and commercial banking businesses to provide our clients with access to financing, as well as research and advisory. And also why we created a new commercial banking green economy team, which is specifically targeted to support our clients in our commercial bank, with access to financing and other opportunities in the new, green economy, really opportunities created by the opportunity to transition to a low carbon future. So, this is really our first goal. And of course, in setting our Paris-aligned financing targets, we're setting forth clear expectations that we want and expect to see our clients operate responsibly and take steps to address their emissions and ideally align with the goals of Paris and really work constructively with them in the effort to do that.
So what role, for example, Marisa, will offsets actually play in reaching your targets?
So it's interesting, offsets can provide a critical vehicle for companies to reduce emissions in cases where, there are not, yet technically viable internal abatement opportunities, or where the cost of abating carbon emissions is, very, very high. So offsets historically have operated as a really important vehicle in compliance markets. And you've seen this historically in the EU, as well as states in the US like California. So, we know that they play a critically important role, and we're going to be at the table to push to make sure that the offsets that are available for companies, both in the voluntary market, but also, future compliance markets, are additional, real, verified, and high quality, so that, we all can feel confident that offsets that companies are using are actually generating real emission reductions.
Is there a conversation amongst banks that actually, some offsets should be used, for example, for offsetting, scopes 2 and 3 emissions?
So offsets historically are used to offset scope 3 emissions because scope 2 emissions are really about electricity generation. So, there are a lot of opportunities, I think, for companies to innovate, across the entire sort of supply chain. And in some cases, that means, looking at internal abatement opportunities. I think, that is historically recognized as where companies should start. You start internal, and then, you look to external opportunities. And, I will say, I think offsets can play a key role in also promoting, broader social and economic co-benefits that are really important to recognize and should be recognized as part of a comprehensive solution to address climate.
Marisa, one of the things that also, is extremely important, I guess, is banks and other organizations speaking the same language. What does net zero mean for you and JP Morgan?
Yeah, it's a great question. So, net zero is, critically important environmentally. And, in announcing our Paris-aligned financing commitment yesterday and our new targets yesterday, this is really our effort at JP Morgan to take steps within our business, but also importantly with our clients to, get the world on a path where we are hopefully achieving real, concrete, tangible, near-term action that will get the world on a pathway to where we can eventually achieve, ideally, net zero carbon emissions by 2050. So, the challenge we face today is, there has been so much progress in innovation around low carbon solutions, but we know the world is not yet on a pathway to meet Paris. And so this is where I think taking near-term action that can be measured against, and it's really about ambition. And I think what we have announced is really symbolic of JP Morgan saying we have a role to play, we want to work with others, and we want to make a difference.
Marisa, thank you so much for joining us today. Marisa Buchanan there, JP Morgan Global Head of Sustainability, on the back of those important announcements from JP Morgan. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Amazon is going on a hiring spree. It is planning to add 10,000 more permanent jobs in the UK by the end of the year. That would bring its total headcount in the country to 55,000. It comes just a day after the world's largest online retailer said it was hiring another 75,000 people in North America. Airbnb is seeing signs of a rebound. It beat expectations for bookings in the first quarter, reflecting pent-up demand for travel. But the lingering effects of the pandemic are still on display for the company. Losses ballooned as a result of a debt repayment it took on during the crisis.
This is going to be a travel rebound like we've never seen. I've never seen in my lifetime. Probably can be a travel rebound like anything you've seen in a century.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Leanne Guerin's there with some of the news that we're watching. Other news, conflict between Israel and Gaza escalates. It's now the 5th day of hostilities. The UN Security Council schedules another emergency meeting. We, of course, analyze the situation up next. This is Bloomberg. Well, Israel has fired artillery and mounted more airstrikes into Gaza as Hamas militants launched rockets deep into Israel. Over 100 people have been killed in Gaza and 7 in Israel since hostilities began 5 days ago. We're joined by Bloomberg's international executive editor, Ross Matheson. Ross, first of all, how are ground troops now being involved in all of this?
Well, initially there were reports that ground troops had actually gone into Gaza. That's not the case. What they were doing was supporting the aerial bombardment with tank and artillery fire on the Gaza Strip. Even so, the military in Israel has been authorized to call up 9,000 more reservists and says it's preparing scenarios, including a possible ground incursion. That's really as this fighting shows no signs of subsiding. As you were saying, more than 100 Palestinians and 9 Israelis have died. We've got hundreds of buildings that are damaged or in ruins. And every night we're seeing fresh bombardments from either side. So airstrikes into the Gaza Strip and a barrage of rockets back from Hamas into Israel. In fact, the Israeli Prime Minister may have been emboldened by the US President Joe Biden defending the Israeli government's response to the Palestinian rockets. Biden was saying he's not seen a significant overreaction. So that suggests that there's no inclination on either side for now to back down.
All right, Ross, thank you so much. We'll have plenty more from Rosalind Matheson, their executive editor for international government, shortly on the Bloomberg Surveillance, because it continues in the next hour. Matt Miller is actually off today, but I'll be joined by Kailey Leinz in New York. We'll look at inflation, we'll look at markets, we'll look in depth at crypto as well. It's been quite a week and it's Friday, so happy Friday, everyone. We'll have plenty more on our top stories shortly. This is Bloomberg.
Anyone who is fully vaccinated can participate in indoor and outdoor activities without wearing a mask or physical distancing.
I think it's a great milestone, a great day. It's been made possible by the extraordinary success we've had in vaccinating so many Americans so quickly.
It's not about herd immunity where we stop the virus from circulating. It's about no longer fearing COVID more so than we would the common cold.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, good morning, everyone, from London and New York on this Friday, May 14th. Our top stories today. Bitcoin gets battered. The world's largest cryptocurrency is on track for a 10% decline this week after Elon Musk doubles down on his attack. Back to the future for Singapore, the island state is returning to those lockdown-like conditions of a year ago. Officials blame a rising number of untraceable coronavirus infections. And Disney, it disappoints. Streaming subscriptions come up short at the entertainment giant. Well, we'll hear from the chief executive, Bob Chapek. I mean, Kailey, I'm definitely doing my bit for streaming services, especially for kids' movies. So I don't know if everyone else is, but it looks like they're not. The focus, of course, has been on inflation all week, and then it kind of filters through to some of the things that we're seeing, not only in commodities, but Bitcoin.
Yeah, Bitcoin is one of the key stories of the week, Francine. Even for all of the economic data we have gotten, the upside surprises on inflation, Bitcoin has pulled a lot of attention. Now, as for what's going on in the broader market, we are seeing some pretty robust dip buying taking shape today. That was evident in the Asian session. Both Japanese and Chinese equities closed higher by about 2.3%. The one exception in Asia, I would note, though, is Singapore. That benchmark equity gauge actually lower by more than 2%. That is as it returns to lockdown-like conditions with a number of rising COVID cases, and that calls into question the travel bubble with Hong Kong as well, and that weighed heavily on the stock of Singapore Airlines, down the better part of 6%. Elsewhere in the Singapore trade, I would note what's happening with iron, down as much as 10% when it comes to futures, now off about 5%. That's as China tries to crack down on the rally we have seen in some commodity prices. We have seen a cooling off in commodities broadly, though. That may be easing some inflation fears in this market. Flipping up the picture and taking a look at what's happening in Europe, it is a pretty picture at Map Markets Go on the Bloomberg terminal, mostly green across the screen for the major benchmarks on the continent. The stock 600 right now higher by about 0.4%. The FTSE 100 in the UK by about 0.75%. In the bond market, the German 10-year bond yield is just off of its highest since May of 2019, right now sitting at negative 12 basis points. And the euro stronger against the dollar, back through 121, sitting at 121.24, though it is a broadly weaker dollar story today, at least in the G10 space. As for what the picture looks like for other U.S. assets, we saw that dip buying coming in yesterday after 3 days of losses, and we are seeing follow through on that this morning. Futures up about 25 points on S&P E-minis. In the bond market, yields are moving lower. It's a bit of buy everything today. We're down 2 basis points on the 10-year to 1.63%. In commodities, crude was lower. Now we're up 0.8% on WTI to 64.35 a barrel. And then, of course, Bitcoin, the story of the week, Francine, still set for a pretty large weekly loss, but we are seeing a bit of dip buying there as well. Bitcoin up 2% to above $50,000 once again, Francine.
Yeah, so much going on, actually. A look at what's ahead today as well. Lots of economic news to unpack. 7:30 a.m. New York time. Kailey will get the minutes of the ECB's April meeting. Important data out of the U.S. as well. At 8:30 a.m. we'll get retail sales for April. And then at 10 a.m. Eastern time, we'll get the preliminary University of Michigan consumer sentiment for May. Now, we'll be keeping a very close eye on inflation gauges included in the survey. It's pretty amazing, actually. I was speaking to a foreign exchange strategist, Jane Foley, and she was, trying to link actually what's going on with cryptocurrency and inflation, the fact that the markets really had a wild ride on both those fronts today, Kailey.
Yeah, it's been a wild ride today. It's been a wild ride this week. What's interesting is that so many people were actually calling Bitcoin an inflation hedge, and that isn't necessarily something that worked for you this week, because Bitcoin, again, is set for a pretty large weekly loss, even though inflation data has been surprising to the upside. But maybe we can blame Elon Musk for a great deal of that, Francine.
I was going to say, you put it so diplomatically. If you're invested as a hedge for inflation, you would not be happy with those tweets. Now to crypto, and Coinbase shares having been fluctuating in pre-market trading after an earnings report amid some turmoil in the cryptocurrency space. Elon Musk, as we were just saying, setting off the selling with the announcement that Tesla will stop accepting Bitcoin for payment. Well, joining us now is Bloomberg's Danny Berger. Danny, we're kind of obsessed with the tweets just because they're, wild and we don't know what comes next. But where are we today?
Yeah, well, I mean, not only are they wild, but they have a very clear impact on Bitcoin price because, I mean, Bitcoin is one of these things. There's not that many fundamentals backing it, so it's going to be a lot of technical analysis and apparently a lot of Elon Musk's whims. Now, that's probably not the best news if you're one of these crypto stocks. Coinbase, of course, being one of them. Look, this is so dictated on what Bitcoin does. On the price of cryptocurrencies is how Coinbase moves. So, sure, they had their earnings, nothing too revolutionary, a slight miss on revenue. They're going to look at adding Dogecoin to their base as well, but they slid aftermarket and now they're up. Again, this just reflects the price of what Bitcoin has done. So not only does it show the danger in being a crypto-linked stock, but it shows the danger in an asset that really is just tied to sentiment around Elon Musk. And look, there are a lot of Bitcoin proponents who have been pretty angry about the words coming from Elon Musk about his tweets over the environmental concern of Bitcoin, which he continued to do yesterday. But this sort of collapse in price, these questions around Bitcoin, it also has more people talking about this sort of idea, as our colleague Tracy Alloway, I think, put it so interestingly, is that Bitcoin will become the AOL of the crypto space, in that it becomes sort of the first mover, but then after that, we get more efficient cryptocurrencies that take its place in popularity.
Very interesting. Thanks so much to Bloomberg's Danny Berger. And Danny was talking about the collapse of prices in crypto. We're also seeing prices for Singapore assets under some pressure today, and that's as Singapore is returning to near lockdown mode for 1 month. The authorities there are concerned by an increasing number of unlinked COVID cases. Joining us now with more from Singapore is our senior editor, Derek Wallbank. Derek, what exactly are these new restrictions?
Well, Singapore has been one of the best, if not the best, places to ride out the COVID pandemic so far. But a reasonable spike in cases is changing a lot of the outlook on a city-state that had been trying to reopen. Gone is return to office. Work from home is now the default. Gone is in-person dining. There's going to be a month of takeaway only here, and max group sizes that had been expanded to as many as 8 people allowed to get together is now down to 2. So there is a meaningful pullback here in Singapore. As I say, one of the best places so far to ride out the pandemic. Only 31 deaths the entirety of the pandemic to date. But as you saw a couple of cases creeping in, the government trying to act fast to get in front of it, especially as many of those are from this new Indian variant, which has a lot of health officials spooked.
Derek, thank you so much. Bloomberg senior editor there, Derek Wallbank in Singapore. Now, we're just getting some breaking news, which I'll mention really quickly. Kailey, this is very UK, but actually it is making waves, and this was one of the biggest Treasury Select Committee testimonies that we saw with David Cameron and, of course, Lex Greensill. We know this did not end well, and we understand now that there's also a probe into, there's an SFO probe from the UK into GFG Alliance. Now, this goes back basically to Sanjeev Gupta and the fact that it's one of its aluminium producers then agreed to terms to refinance his exposure to Greensill. So it's kind of all linked, but it's an interesting development, the fact that actually the authorities have decided to take this more seriously, and we'll dig into it a little bit deeper. Now, our other top story, fighting in Israel and Gaza has escalated further despite international efforts to calm the conflict. Israel launched a renewed assault on the Gaza Strip with tanks and artillery. That's after days of airstrikes that have failed to stop the heaviest rocket fire yet from Hamas. Let's get more now from our Bloomberg executive editor for international government, Rosalind Matheson. Ros, how does this continue? Does it just continue escalating?
Well, that's right. We're seeing things, if anything, pick up rather than de-escalate with that heavy fighting again overnight, and the inclusion of not just aircraft but tank and artillery fire on the Gaza Strip. There were those initial reports that ground troops had gone in. That's not the case, but the military is getting more reservists at the ready and is preparing scenarios, which does raise the prospect, if this does continue, that the Israeli government decides the best thing to do is to send troops into the area, which risks just full-out war between Israel and Hamas, and no sign that either side is ready to give ground. In fact, the Israeli Prime Minister may have been emboldened by the US President, saying that he's not seen a significant overreaction by Israel so far. But the hardest thing to contain could be the violence within Israel itself, with riots and fighting in mixed Arab-Jewish quarters of Jerusalem. And that communal strife has really torn at the uneasy coexistence that goes on there and brought out unresolved issues, including government policies that disfavour Arab citizens. So while every effort is being made to stop this turning into all-out war, and we're seeing that diplomatic effort pick up again further today with the Egyptians, getting a path to de-escalation won't be easy, even with envoys there, as I said, from Egypt and from the US arriving also.
All right, a story we will continue to stay on top of. Thank you so much to Bloomberg Executive Editor for International Government, Rosalind Matheson. Now from geopolitics back to the markets, I do want to take a look at some of the action beneath the surface of the equity markets, some of the stocks moving in pre-market trading. The big earnings report after the bell last night was Disney, and it was a disappointment. The company missing expectations on subscriber additions for Disney Plus, its streaming service. That a pretty rare stumble, and it is dragging on the stock. It's lower by the better part of 4% in early hours. Luminar actually reported a wider than expected loss after the bell yesterday, but maintained its full year guidance. Maybe that's why the stock is managing to gain about 3.5% in pre-market trading. AMC is also higher. It seems that meme traders are in action once again, Francine. It's up for a 6th day in a row, spiked 24% yesterday, and now higher by 4.6% in early hours as they try to send the stock to the moon once again. And finally, it's been a rough go of it for Cathie Wood's ARK funds. The ARK Innovation ETF has fallen in 11 of the past 13 sessions, but keeping in with that broader buy the dip narrative, it is higher by 2.5% before the bell, Francine.
Kailey, to the moon. Coming up next, James Bevan, CCLA Investment Management Chief Investment Officer. I don't know whether he'll have a thing or two to say about going to the moon, but he probably will. And then later on, a conversation also with Anna Stupnizka, a Fidelity Global macroeconomist. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London. Matt Miller is off today. Well, Francine, Matt is off today. He was also off yesterday, and he missed what was a very ugly day for the commodity complex. The Bloomberg Commodity Index actually had its worst day in about 2 months, falling more than 2%. And of course, we have been paying close attention to the red-hot commodity rally for weeks now because of its implications for inflation. So the drop we saw yesterday maybe eased investor concerns about those price pressures somewhat. Today, though, I would note we are seeing a bit of a rebound in the commodity complex. The Bloomberg Commodity Index up by about 0.7%. So the question is, are those inflationary pressures going to stick around for longer, Francine?
I know it's all happening this week. There's, commodities on the rise and then they're down. We saw the same with tech and all this inflation concern like underpinning everything in the market. So joining us now to talk about all of this, James Bevan, Chief Investment Officer at CCLA Investment Management. James, first of all, simple and difficult question. Where are you on the inflation debate? Will we see the Fed move because the economy overheats, or do we trust them to say that actually steady as they go?
I think, first of all, that inflation will rise. I'm expecting the US personal consumption expenditure deflator to get to 3 percentage points. Here in the UK, I would wholly expect the UK CPI to be north of 2% in the fourth quarter, along with the retail price index at over 3%. But that doesn't mean that central banks will take action. I'm expecting policy to remain on hold, and the heavy lifting, if you like, more likely to be done by the bond market. So I'm expecting the 10-year US Treasury yield to get to 2% in the current year and 2.5% next year.
So, James, are you buying technology stocks? Do they look cheap at the moment after the sell-off?
Well, I remain a long-term bull of technology stocks, and I see some companies like Microsoft at levels which I would regard as hugely attractive. And I accept that there are companies like Disney that have just had a relatively disappointing set of results. And I would see that as a long-term buying opportunity, because Disney is absolutely one of those companies that embraces modern technology, that has a well-diversified business, and is not priced, from my perspective, to take account of its long-term growth trends.
But we also saw Disney disappointing when it came to those subscriber numbers in its earnings after the bell yesterday. Do you sense that there may have been a pulling forward of demand because of the pandemic?
I certainly think there was a pulling forward of the numbers, and I certainly don't think that we should assume that the subscriber numbers would ever be on a straight line. I think the trend of subscriber numbers remains hugely positive, and the reopening of the theme parks is clearly going to be terribly important in the short term. Of course, the long-term outlook for subscriber numbers really relates to Disney's content, and I would observe that the content carried on Disney Plus is improving in leaps and bounds, and that will be the primary driver for the long-term demand that I fully expect to come through.
Interesting. I want to go back to something you mentioned earlier about your 2% call on the 10-year, 4-year end. What's the path to get us there, or the catalyst to get us there, considering we're at 1.64% right now, despite economic data that has been quite robust?
Well, very interestingly, in the calendar year to date, the Federal Reserve has bought more than the dollar bonds issued by the US government. And I think that we will see continued issuance in the balance of the year. And I think that we will see the Fed beginning to care less about the amount that it buys as the economy strengthens. And so for me, it's a simple imbalance of supply and demand. And I think that we are now in a period that might be likened to the period 1942 to 1951, when the US authorities put a ceiling on bond yields at 3 percentage points, but allowed inflation to run, with the net result that the real value of government debt halved over that period, having been built very substantially through the war years. And of course, the US government would now like a small dose of inflation to take down the huge cost of debt that it otherwise has to run.
James, give us your most controversial call. Are you like fully invested in Bitcoin right now?
Well, maybe it's highly controversial to say that I have no Bitcoin. I see Bitcoin as an utter speculation. It is not based on any fundamental premise of value. It is very different to a digital currency that might be issued by a central bank, which would obviously have characteristics of conventional currency, but would allow central banks to apply both positive and negative interest rates. I think that cryptocurrency values will fall materially as people come to appreciate that we are not in a period of money destruction. Some people have likened the world in which we lived to the 1930s. I think that's completely wrong. I think the Elon Musk view that he no longer wishes to accept crypto for his cars is very important. But I equally think that the cybercrime challenge is enormous, and authorities will increasingly move to say that Bitcoin is not friendly.
So, Dubai, I mean, if you were to protect yourself against inflation, do you do it with gold?
No, absolutely not. I look at the gold-copper price relationship, which tells me that US 10-year yields should actually be at 2.5% right now. To protect myself against inflation, I want to focus on long-term quality companies that can enjoy inflation plus revenue gains, but with stable margins. And for me, that means focusing on quality. It means focusing on robust free cash flow yield. It means focusing on structural growth. And funny enough, that takes me back to a big chunk of the tech sector. It also tells me that Disney will be a winner in that sort of environment because it will be able to charge more for its streaming services and its theme parks without the incremental uptick in costs. Now, the big issue, of course, is will wages accelerate faster than prices? I don't think that's happening because what I would observe in the States is a step shift up in productivity as companies increasingly deploy technology to enhance their margins.
All right, James, thank you so much. I certainly know exactly what's on the Disney streaming service, maybe all too well. James Bevan, their Chief Investment Officer at CCLA Investment Management. Now, later today, an exclusive conversation with the Cleveland Fed President, Loretta Mester. That's at 8:30 a.m. in New York, 1:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London. Matt Miller is off today. Now, Francine, let's get the first word news. And Amazon is extending its hiring spree. It plans to hire 10,000 more people in the UK by the end of the year. The world's largest online retailer will employ 50,000 people in Britain. The new jobs will be in corporate offices as well as in Amazon Web Services and operations. Republican senators say they're encouraged about the chances for a deal on infrastructure after meeting with President Biden. One of the 6 Republicans who went to the White House, Shelley Moore Caputo of West Virginia, called the conversation very productive. She said the president told them to come with their own proposal so he can react to it. Meanwhile, the Biden administration is trying to ease the fuel shortage on the East Coast caused by the pipeline shutdown. For the second time, the government has waived U.S. shipping requirements for non-American tankers that can transport gasoline. The pipeline reopened Wednesday, but it could take some time for the network to return to normal. And meanwhile, Bloomberg has learned that Colonial Pipeline paid almost $5 million to Eastern European hackers last week. That contradicts reports that the company had no intention of paying an extortion fee to help restore the fuel pipeline. Colonial paid the ransom in difficult-to-trace cryptocurrency within hours after the attack. And of course, Francine, we heard reaction from other government leaders. Nancy Pelosi held a press conference yesterday expressing her disappointment. And she said this cannot be open season for hackers now. That's the real concern here, is that this inspires similar behavior.
Yeah, and this was always, you know, I always thought that actually even when it comes to hostage payment and things like that, it was always foreign policy, right? Because it could incentivize people to do more. We caught up with our Jamie Terabay a little bit earlier on. She's our cybersecurity expert, and she was saying, just also remember, though, that 5 million is a drop in the ocean for Colonial, so it's not that huge. Right. But we did see another attack today from the Irish Health Services that also had to shut down their IT services. Now, coming up next, Anna Stupnizka, the Fidelity Global macroeconomist, will talk to her about inflation. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Kailey Leinz in New York. Matt Miller off today. Now, a lot of the focus, of course, on the cryptocurrency after the wild ride, Kailey, that we've had, and the inflation. I mean, that really roiled markets this week.
Yeah, what has greater power in this market, inflation data or Elon Musk on Twitter?
That's
I feel like
a good question.
It's kind of a toss-up because Elon Musk can wield incredible power in just a few characters. We've seen that play out with Bitcoin today, or this week, Francine.
Kailey, that's like the perfect question for Twitter. I think that's going to be your tweet in 30 minutes.
I'm gonna put out a poll shortly after the show. But first, we need to get a check on the markets. We are seeing some pretty strong buying of the dip action today. It started in the Asian session, or really in the U.S. session on Thursday after 3 days of losses, followed through in Asia and now following through in Europe as well. The stock 600 up by about 0.5%. Here in the U.S., it is technology leading the way. NASDAQ 100 futures up more than 1 full percentage point at this point in time, up 155 points. In the Treasury market, you're seeing buying there too. Yields coming in about 2 basis points on the 10-year to 1.63%. And of course, got to talk about cryptocurrencies, Francine. It has been an incredibly rough week for Bitcoin. No doubt about it. It's still down something like 9% on the week, but it is rebounding a bit today, and that is aiding some cryptocurrency-tied stocks in pre-market trading. Coinbase, one of them, of course, it also reported its first earnings as a public company after the bell yesterday. Did miss a little bit, just fractionally, when it came to revenue, but the stock's still up nearly 4%. Marathon Digital Holdings up by 5%. Riot Blockchain by 6%. And then, of course, Tesla, after that pivot U-turn from Elon Musk on Bitcoin yesterday, fell about 3%, but it too is rebounding this morning, Francine. Tesla up about 2.5% before the opening bell.
Kailey, a lot to look out for. Now, the former Treasury Secretary Larry Summers has also been one of the loudest voices raising concerns about inflation. Summers spoke to David Weston about this week's CPI data.
I was on the worried side about inflation, and it's all moved much faster, much sooner than I had predicted, and I think that has to make us nervous going forward.
Well, for more of that interview, catch Wall Street Week tonight at 6 p.m. New York time, 11 p.m. in London. I have to say, Kailey, when I saw that CPI print, I immediately thought of Larry Summers. Now, joining us to talk about all of this is Anna Stupnizka, a global macroeconomist at Fidelity International. Anna, thank you so much, as always, for joining us. The focus is on inflation, and the focus, of course, is on whether it's transitory or not. If people work from home more, does it boost productivity, and therefore does it lead to higher inflation?
Well, I guess it's hard to say, but I think judging from a very small sample size myself, I think it is boosting my productivity working from home. I think that's interesting. Obviously, I think the baseline, our baseline for the time being, is that it is transitory. We're seeing those supply side shortages boosting inflation. Obviously, reopening is leading to higher demand. Commodities, we know the story. But it is true that it will be interesting to see what the pass-through is from commodities into inflation and from wages into inflation. Even if wages are going higher and, as you say, productivity is improving, that might either offset each other and actually not have an impact on inflation. So for the time being, we think it's transitory, but we remain open-minded, and certainly over the next few months, we will continue seeing those high readings, inflation in the US, especially above target, and the Fed will be feeling the heat.
Yeah, I mean, the Fed will be feeling the heat, maybe markets will be feeling the heat. Where do you put emerging markets in all of this? So, you know, whatever happens with inflation, either we're importing it from China or from the US, will have an impact on the emerging markets probably the most in terms of funding.
Yeah, that's right. And I think actually emerging markets are facing a number of headwinds. One is, of course, the spread of the variants and the low progress on vaccinations, so they cannot reopen very quickly. Even if they reopen domestically, international travel is unlikely to come back properly until at least early next year. Then, of course, inflation in emerging markets, as we know, is very much driven by commodities and food inflation, and we are already seeing spikes there. And in fact, central banks are already acting on it. Russia, Brazil, Turkey, and I think some other emerging markets like Poland will have to hike rates to keep that inflation pressure under control. And a third headwind it would be from funding costs. And yes, we know that emerging markets actually remain vulnerable, and coming out of this pandemic are even more vulnerable than before, particularly those fragile countries that we're used to talking about. So I actually think it's not a very benign environment for emerging markets, despite the strong growth, which is coming out mainly from the US.
Anna, of course, you speak of the emerging market central banks, many of them tightening in a way that Western central banks are just not yet at this point in time. If inflation does prove a bit stickier and the Fed has to make a move potentially too late, what are the ripple effects of that?
Well, I think that the Fed will have to clarify firstly the reaction function. We don't know how they're going to react. We know they're flexible. So I think they will be quite data dependent. And as you say, if there is more evidence that inflation is stickier, which I think would be gauged more from inflation expectations rather than just different components going up. Even if the Fed sees a more sustainable move in inflation expectations, and this is what tends to drive inflation, I think they will start moving. They will start tapering. They can hike rates. I don't think they're worried too much about runaway inflation because they have the tools to keep inflationary pressures down.
But focusing in on wage inflation for a moment, just yesterday we had McDonald's raising wages in order to help it be competitive in hiring workers in what is proving to be a pretty tight labor market. They're not the only ones. Something like 31% of small businesses say they're raising wages to get workers in the door. Are we underestimating those pressures in this U.S. economy?
Yeah, it's possible. I would say that for sure we know that some of those supply shortages in the labor market are temporary. They are related to generous unemployment benefits, which will expire on in September, and also to some to restrictions, lingering restrictions related to childcare, for example. So people are just unable to take up jobs. So some of that is temporary, and it will phase out over the next few months. But perhaps some of that is not temporary. And so looking, as I said, looking at the pass-through from wages to inflation is going to be very important. For the time being, we're not seeing evidence of that, but that's what we are watching very closely.
All right, Anna, thanks so much. Anna Stupnizka, they're global macroeconomist at Fidelity International. Now, coming up shortly, Andrew Pekosz, Johns Hopkins University Bloomberg School of Public Health professor and virologist. We'll talk about vaccinated Americans being able not to wear masks inside. We'll also talk about Singapore. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an exclusive interview with Cleveland Fed President Loretta Mester. This is Bloomberg.
Anyone who is fully vaccinated can participate in indoor and outdoor activities, large or small, without wearing a mask or physical distancing. If you are fully vaccinated, you can start doing the things that you had stopped doing because of the pandemic. We have all longed for this moment when we can get back to some sense of normalcy.
CDC Director Dr. Rochelle Walensky speaking yesterday on the most significant shift in federal guidelines since the start of the pandemic. Joining us now to talk about this more is Andrew Pekosz, Johns Hopkins Bloomberg School of Public Health professor and virologist. Doctor, great to have your reaction to this. Obviously, this is a fantastic way to encourage people to get vaccinated, tell them that they don't have to wear masks as much. Is it also risky? Just 6 weeks ago, Dr. Rochelle Walensky was warning about impending doom.
I think we have to balance the idea that we want to show people that there are going to be benefits from getting vaccinated. We have to balance that with the fact of we still want to control this virus. And there are still many parts of the country that have rates of virus that are too high. But overall, the vaccination campaign, probably combined with the warm weather that's coming, has resulted in a pretty dramatic reduction in virus spread here in the U.S. And we need to power through. People have mentioned this 70% of the adult population number. We need to continue to power through and get to as high a level as possible. And hopefully this is one of those things that will help us get there.
I must admit I'm excited about the prospect of not having to wear a mask all the time. But at the same time, I also cast a nervous eye toward India, toward the UK, where the variant first found in India is spreading. Should that make me nervous, even if I'm vaccinated?
Well, I like to think of things in two ways. In terms of the general public, you shouldn't be worried right now. The vaccines that are here in the U.S. are covering all the variants that we've seen right now. The situation in India, it's a tragedy of the exponential proportions. But what's going on in India sort of mirrors the other things that are going on with variants in this country. Those are things that keep me up at night, or in this case, maybe get me up early in the morning, because we as scientists want to continue to monitor this virus, see how it's changing, and look for those changes in the virus that are causing it to be either more easily transmissible or evade vaccine immunity. But right now, the vaccines that we have here in the U.S. are working really, really well against all variants out there. So the general public right now shouldn't be concerned about this. They should just continue to get out there and line up to get those vaccines in their arms.
Andrew, I'm so excited to have you, especially on a day like today. So thank you so much for waking up early for us. When you look at what we know about the vaccines, so they protect you. They have a good efficacy rate. If I catch it, because people are still testing positive even if they're vaccinated, can you still pass it on to someone? Do you transmit it without catching it yourself?
Yeah, this is some of the great data that has come out since the clinical trials. It certainly looks like, particularly in the case of the Moderna and the Pfizer vaccines, that you're much less likely to get infected and pass the virus on if you're vaccinated. We're seeing a focus on the cases of people who are vaccinated and gotten infected, but we really have to put that into context and compare it to the millions of other people that have been vaccinated and have not had any signs of infection. So I think these vaccines have really come out to be fantastic, probably better than I would have ever hoped to have been in terms of protecting against severe disease, regular symptomatic disease, and now we're seeing the data that says it's even protecting from transmission. So things are working. It's still not a bad idea to have a mask around. Groups are always an issue still right now because you want to make sure that you're not coming into contact with large numbers of unvaccinated people. But these vaccines are really working, and that message really has to get out there to the general population. They're safe and they're efficacious, and they're turning the corner on this pandemic, at least here in the U.S.
Andrew, one of their big stories today is, of course, that Singapore has to go back into the lockdowns that we saw a year ago because they can't really figure out why there are virus cases resurging and they can't figure out where. I know only 20% of the population have been vaccinated, but should we worry about these kind of symptomatic, cases, especially from islands that have actually been doing really well in trying to keep the COVID at bay?
Absolutely. And again, as virologists, we're always looking for those outbreaks to try to see if there are signatures there that are simply sort of reflective of the fact that maybe a large percentage of the population wasn't vaccinated, as you just mentioned in Singapore, or is it something that's changing about the virus? And I think we in the U.S. here have been incredibly beneficial by this vaccination process that has come out and the ability of the U.S. government to get vaccine here. We have to continue to think, though, about this as a global disease. The UK variant is now the dominant virus here in the US. And that's an example of a virus that emerged in the UK during a period of uncontrolled virus spread that spread to the US. That same scenario could happen in Singapore, from India and other places. So we need to make sure to keep our global eye on reducing cases as much as we're keeping our eye on getting our US vaccination plan implemented 100%.
Here in the U.S., of course, teenagers can now get vaccinated after the approval of the Pfizer-BioNTech shot for 12 to 15-year-olds. Is that necessary to reach herd immunity?
Every vaccinated person is going to help us reduce the spread of this virus. We still want to aim for greater than 70% of the adult population, but immunizing kids is going to particularly help us when it comes to schools in the fall, because those are the areas where obviously children congregate together, and having some level of immunity in those situations is going to help reduce the spread in schools, spread between kids, spread to teachers and staff at schools. So this is a really good thing. You're seeing a burst of people who have been enthusiastic about vaccinating their kids. It'll be the same thing in that population as we are in the adults. We can't just get 20 or 30% of those people vaccinated. We have to get up to high levels of vaccination. We're not sure what that level is with kids, but again, the more the better. And this vaccine has performed even better in that age group than it did in the adults. So again, so many good signs with this vaccine in terms of safety and efficacy.
Andrew, one of the most difficult questions is that do you trust people to actually, when they say they've been vaccinated, apologies, when they say they've vaccinated, do you take it at face value, or do you need to have some kind of system of vaccination passports or a vaccination card?
Yeah, this is one of the issues that I really do worry about. Obviously, vaccination cards are a bit controversial. I really do think, though, that you have to have some way to validate that people are getting vaccinated, because, again, when you get together in large groups, which will be the next step in terms of release, right? We'll be getting back to stadiums full of fans at baseball games. And in those situations, bringing together individuals who aren't vaccinated, who perhaps think that because there's vaccines in the population that they're somewhat more safe, is going to set up these situations where we can have bursts of infection. So it really is important for everybody to get vaccinated. The issue of how you validate that or verify that is a controversial one.
Yeah, and we're seeing it, in certain cases in the U.S. investigations with players. Andrew Pekosz, thank you so much. Johns Hopkins Bloomberg School of Public Health professor and virologist. Now, the Johns Hopkins Bloomberg School of Public Health is supported by Michael Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Now, coming up, shares of Disney falling on fears that a key engine of the company's transformation may be losing some steam or some momentum. We'll hear from Disney's chief executive next. This is Bloomberg.
We've now launched in a number of markets, I think 59 markets across the world, and we've not been disappointed yet in terms of the uptake of subscribers in each of those markets that we've grown. We've executed a little bit differently in each piece of the world, depending on what content rights we have and what the particular needs of the consumers and whether we have sports rights in those particular markets. But regardless of that diversity of how we've gone to market, we've been absolutely thrilled, both across our general entertainment platforms, which is the Star Plus platform, as well, our Star platform, as well as our Disney Plus platform. So very, very happy with it and the uptake across all markets.
Now, you ran the parks for many years, and we're hearing so much talk about a huge summer surge, a roaring 20s-like surge. How big a surge in summer demand are you expecting to see?
Well, we are really encouraged by what we're seeing in terms of not only current attendance, but forward bookings. And again, today with the CDC's guidance in terms of the relaxation of the mask requirement, we think it's again going to be a big catalyst for growth and actually being able to put the number of people in our parks that we're more accustomed to. So it's very, very positive. Our future bookings are looking really great. In Walt Disney World, in fact, they're already back up to fiscal year 19 levels, which is, of course, pre-pandemic. And that would be the greatest barometer of all, is that, at least in terms of the assurance that Disney's built up with their guests, that we're going to be able to operate responsibly and provide those magical experiences. They're thrilled to come back. There's a craving. I saw this on Main Street at Disneyland when we just recently opened up. There's a craving, not only for our guests, but our cast to come back and be part of this sort of social experience, to experience that magic with your friends and family. And so we're just glad to be able to bring people back to work and please our guests at the same time.
Well, that was the Disney chief executive speaking to Bloomberg Technologies, Emily Chang. Now, Tom Keene, co-anchor of Bloomberg Surveillance, I should say that with a very gravely voiced Tom, joins us, and you're focused on retail sales data today. And sports?
Oh, sports a little bit. We're mostly focused on retail sales. We've got Friday's jobs report a week ago, and then we've wandered through some inflation data to this very important retail sales on, a good 69, even 70% of the American GDP. Francine, the chart is real simple. It shows the emotion of the pandemic that Disney and others have been dealing with. You see the stability of the control group. The control group is basically everything in, you take out building materials, you take out fuel, gas, you take out bow ties, and you've got the control group. And the answer is there's been huge instability, the plunge down that we all lived in March and April, and then some back and forth and back and forth. And today, maybe a little bit of the fourth coming back from the boom of a month before.
Yeah, Tom, the only thing, so we were speaking to Jane Foley earlier, and, she said, sure, retail sales is part of it, that spokes inflation, but if people don't go back to work, then what does that do to inflation, right? Well, that's maybe a component that's forgotten some of the arguments. You are really on the zeitgeist of the weekend, Francine. In America, it's about where do we find the workers. There's two Americas. There's one part of America that's short workers, they can't get the right people, they're raising wages. There's also, and this is at every income level, it's just not lower wage, more mundane work. And also, there's a whole part of America that's not participating. That's the politics in Washington. But right now, we're seeing this inequality play out. I know Mohammed Al-Arian, who was with us yesterday, is noting this morning out on Twitter. Thank you so much. Sure. The interview also of the day is, of course, with Loretta Mester. Tom Keene, co-anchor of Bloomberg Surveillance. Kailey, I love the zeitgeist is definitely on cryptocurrencies, retail, and then we're watching the Mississippi River.
All of the above. Matt Miller is missing a lot today, Francine. I mean, I hope he's enjoying his long weekend, but he's missing out. Yeah, he's missing out, or maybe, just maybe, he couldn't deal with the volatility in Bitcoin. True. We'll get his thoughts when he's back on Monday. It's going to be a big weekend, of course, a lot of reading ahead for many people. I may get a puppy, but that's another conversation. Coming up next, they focus on FX. This is Bloomberg.